Welcome back, guys. It's Jason with your Hopium free crypto channel and, of course, economic cycles. But today we're going to look at, is it a good time to be buying cryptocurrency when Bitcoin crashes? Now, it looks like Bitcoin may be on a slight bounce. We're definitely seeing a few other cryptos have a small bounce from this point. But remember, we have dropped a fair way over the last few weeks. The Bitcoin top was in late November, and we've since seen quite a few of the top 20, top 50, top 100 take some sizable losses in the last 7 days, let alone the last couple of months. So I want to look at the charts and specific signals that we tend to reflect on and use in our trading when it comes to buying strong horses and not so strong horses, the stuff that we want to stay away from. It's the sort of stuff that we talk about in our Patreon membership, which you can find a link to down below. And of course, TIA Premium, where we have the over 7 hours of course content on learning how to trade. Something that I've been doing for over 10 years, and also work with my brother on this, who also has been trading for over 10 years as well in the futures markets. And of course, now cryptocurrency. So there's plenty of great reviews from our members over there as well. So check out the link at the top of the description down below. That's for Patreon. Now, one last thing is SwiftX for the Aussie guys. If you're looking to set yourself up with other exchanges while the market is quiet, which means their exchanges are quiet too, check out the link for SwiftX in the top of the description as well. $10 of free Bitcoin when you sign up and verify your account with them. All right, so the first thing I want to have a look at is the top 100. We can see a lot of red here. Then we're going to look at Bitcoin and the fear and greed, something that we've been covering on the channel since May or June of this year, or 2021, and looking at times to be buying cryptocurrency, provided we have a longer term view and we have our plan intact. We have another plan there that we can follow up on in case you need to sell at a loss or sell at a profit, because we've seen the market rise. And if you don't take your profits when the market rises, then you don't have the dry powder to be buying the cryptos that you want to buy when the market falls. And that seems to be a pretty difficult thing to do for a lot of people, especially when the market is up and you believe the market has to go higher. So the most recent ones that we have been buying and selling is something like CRO. This pumped to 97 cents about 4 or 5 weeks ago and has since fallen. It's 50% down now at 46 cents and could fall a little further. But we're looking at these things to be buying when the market is down. And I'm looking at the market, I'm looking at the fear and greed, which is part of the plan that we had just put together in May and June, just to be at least buying crypto when the market is at its most fearful. And this is Bitcoin. Now you need to look at it in other, or across other cryptocurrencies as well. It may work for something like Ethereum. Ethereum has been around quite a long time and has a very strong base. And if you just take a quick look at all of the strong red here, so this is like the dark orange, you can see that these have been pretty good times in the market to at least potentially dollar cost average. Now, of course, you could say, well, why don't I dollar cost average in at these extreme greed times? It's going to depend on the outlook. And of course, if you look far enough, buying at these extreme times of $12,000, $13,000, $14,000 Bitcoin back in 2019, if you hold it for long enough, then of course it's going to go up. But if you want something to get you into the market when others are extremely fearful, then something like a fear and greed plan can help. And this is what we have so far. Now you need an exit trigger for a loss. And I use Gann rules and I use Wyckoff rules as well. You see me talk about that on the channel. Obviously support and resistance on the charts as well. Then I also want an exit trigger for profits. I want to be exiting these cryptos on the way up. And I tend to rely a lot on Gann's swing charts for this. And that's something you can learn about in TIA Premium. Search Gann swing charts and hopefully you can find something out there. They are one of the most underrated tools in all of trading. If you can learn how to create and draw a swing chart, especially on a weekly chart, something a bit more longer term, it's a really handy tool to bring into your own investment plan and start to look at your own assets at longer term timeframes and continue to buy in on the way up. So they're the two other triggers that you need for a plan. You need to have an exit for a loss, an exit for a profit, risk management. As you can see here, we're just looking to invest $1,000. So this is just to give an idea of what the plan is doing. $1,000 every time the fear and greed index, which you can see right here, when this hits 15 or lower. Now you can adjust these settings to suit whatever you like, and it's something that we've covered and looked at different parameters with the members. But yeah, you could use maybe something that's 16 or under or 12 and under, but you just have to go back and have a look at that. I'm using 15 for this plan here. And the last two purchases that we did were on the 6th of January and the 8th of January, 43,400 and 41,500. When we were buying all this crypto in the low to mid 30s, and the last one here was at 29,000, at the time the market goes up to 38, comes back down to 32. So you kind of have to get a feel for holding this longer term. It's not a short-term trading strategy to be buying on momentum. This is more of a buy the dip strategy for a longer-term portfolio. So the current total of Bitcoin that we have in this portfolio is at 0.4 of a BTC. The return's at 20%. The total invested is 14,000, and the profit at the moment is 2,800. Now, for a plan like this, where I'm buying cryptocurrency and holding it longer term, selling it at those targets of my WD GAN swings and also Wyckoff analysis there, I want to store it on something like Ledger. So I'll leave a link to a hardware wallet, Ledger Nano X, in the description down below. Check that out if you haven't already got your hardware wallets to store your crypto. They were having some supply issues in late 2020, but I believe now it's looking good. So at least the market is quiet, and these are other things to do when the market is quiet to protect your portfolio. Now I'm going to look at Bitcoin on the chart. The next thing I see coming up, and this is for the bearish, fearful, extreme fear side of the market, is the death cross. And this just has to do with the moving average, so 50-day, 200-day. As these moving averages converge, cross one another, we get the death cross. Generally, it happens too late in the market, or the signal is too late for any real action that needs to be taken. And then you also have the golden cross, which is the opposite, and the market takes off from that point. But again, it's sort of too late. That's why I look at GAN and also Wyckoff analysis. But I wanted to bring this one up because I believe that we'll probably start to see this come up a bit more. This might scare some people, that stops them from actually taking action in their plan because they believe a death cross is going to crash the market and it's all going to be over from that point. But what I want to look at on the chart from the death cross on Bitcoin is what's happened in the past. So the main thing I'm just looking at here is we've had the death cross. So this is what it looks like here. The yellow is the 50-day moving average. The blue line is the 200-day moving average. And so when the yellow crosses under the blue, we get the death cross. When the yellow, the 50-day, crosses above the 200-day, we get the golden cross, which means everything is rosy and prices should go to the moon. It looks like we're starting to head, we're a few days off a death cross. And what's happened in the past, just from a quick look at 2019, 2020, is when we start to get a lot of death cross, so the yellow going under the blue, golden cross, death cross, golden cross, it's generally in an accumulation stage. So if you believe we're seeing that now, the death cross, the golden cross, potential death cross, and of course, for us to go back up again, we'll have to get through into a golden cross again, then this could just be another massive accumulation section of the market at higher prices, so that the market is adjusting to new normals, new higher prices. It doesn't mean we can't go into the high 20s or $30,000 range for Bitcoin, but it's just a matter of getting a longer term perspective of how the markets will move, especially as they start pricing in a new normal for a higher price for Bitcoin and potentially Ethereum as well. As we see Ethereum just drop to around 3,000, 3,100. The new normal a long time ago was $80. So this was the bear market in 2018, 19, 20. So between $80 and about $300. That was what was looking at being the new normal when we had the golden cross, the death cross, the golden cross, death, and golden again. The market was finding its new normal. And so if that is what's happening right now, then we're looking between around 1,700 and the highs of around 4,800. So it's just putting in new levels, new pricing. We've talked a lot about Bitcoin, a lot about ETH, what's going on, death crosses, the fearfulness of the market, but should we be buying cryptocurrencies? And of course, it's going to come down to the stage of that crypto at this point in time. So we're going to say that Bitcoin has crashed, it's at its low levels. Should we be buying other alts? And I've got Matic here as an example. Matic crashed into that 19th of May low. So that was the one of the major crashes that we've seen on Bitcoin during this cycle. So that's back in this section here, as the market failed to get back to its old high of 65,000 back in April. It failed in May and then crashed into the low of around 28,000. So this took about 2 months at this low period, 2 to 2.5 months. And the price came back down and tested those high $20,000 levels a couple of times here, or a few times. Now, in that period, we had Matic. Matic was testing the low. So this is Matic USD. That was at around 70 or 80 cents. Bounced back to 240 and then came all the way back down to a lower price of around 60 cents. But since then has started to climb its way out. Now, some would say that this is still a good buy at those lower levels, but I'd be looking at something more like Solana. So while the market was crashing, Solana had its lows at 20 bucks, bounced to around $40, back down to 20, 36, 20 before, which we now know it took off to around 200, fell again to 120, and then took off finally to around $260. So this was more than a 10x in that period, whereas Matic has only, well, since the 60 cent low, it's basically tripled and a half. That's where we're currently sitting at $2.10. So the piece of the puzzle that I often come back to is, what is the crypto doing against its Bitcoin value? And I want to see some solid accumulation and then the market take off. So we can see from Matic BTC, during that same period, the market came back down and continued to test those lows of around 2,100 Satoshis, but it wasn't getting that takeoff movement, unlike Solana, which is what we saw when it comes to Sol BTC. It was getting its tests, but then it started to break through the highs. So if we zoom in on this section, which is so far away now, you can see that the higher lows begin to form, another higher low, and then the market takes off from those highs. Whereas we go back to Matic, and it was trying to put in those higher lows, but kept getting rejected at our GAN 50% level, and then fell all the way back down. We had a higher low, and then it's tried to take off again, got rejected at 50%, but then it made a new higher low here. So Matic needed more time to accumulate than Solana, because Solana had gone through its accumulation stage, and we could start to see that as the market was breaking out. Maybe the signals weren't there on the USD pair, but I was looking at the signals on the Bitcoin pair. And then if you want to take it one step further, maybe have a look at Ethereum pair as well. So to recap what I'm looking at here, I look at the USD pair, look for higher lows that are forming, look for breakouts. You can see here as Solana as the example, there is the higher low. Then you get the breakout. We got some good volume coming through. And then also keep an eye on where the 50% levels are, because you want this the market that you're trading in to be consolidating above 50% levels. So you can see that at the moment, Solana BTC, there's our 50% level. It bounced cleanly off that 50% and has tried to shoot back to new all-time highs. So this could be getting a little weak again. It tried it in October, but it looks like we might be getting weak. We've fallen under our 50% of the down range. And then also some of these lows that are coming in at around 310,000 Satoshis. So keep a lookout for that on your cryptocurrencies that you are looking to accumulate when the market is down. If you're interested to learn more, go and check out the link to the Patreon link down below. So this is the Investor Accelerator Lite. You've also got Premium, which has the whole trading course there. So check this out. Get yourself 16% off, 2 months for free if you sign up for the annual plan there. Make sure you've liked, subscribe, bell notification icon. See you guys at the next video. Until then, have more fun to get more done.